I want to go back to something you mentioned, Chris. In a volatile market, I feel it's in your best interest to lock in. And it sounds like you have a program where you can lock into your rate, and if things do bottom out, you have an option where it's technically not a rate lock. You have an option to go, I locked in at 4 and now rates have dropped throughout my loan process and it's now 3 3/4. So can you talk, am I correct in saying that? And can you just talk through that a little bit? Because it sounds like that you should lock today then, right? Like there's only upside. You hedge against rates going up and you get the benefit if they go down. Is that correct?
That is correct, with one little caveat. Okay, so you're only allowed one float down during the process. Okay, and usually it has to be at least 0.25%. Okay, so that's what lenders that do have float down options allow you to do. I am a big fan. If you are comfortable with your payment, no matter where the interest rate is at, when you sign your application or when you sign that contract, lock that in. Okay, because you can always float down at least once during the process. So there's now if rates go up, you're protected, right? So that's the thing. We're always worrying about worst case scenario. So if you're comfortable with that payment, we do have that float down option, which is huge because again, if rates go down with how volatile it is, you might see in a day where right now something happens and the market shifts 0.5%, not 50 basis points, but an actual 0.5% interest rate. You want to be with a lender that can do that for you. And that's very, very important. But again, you only get to do it once during the process. So just, I get that when rates start going down the other way. Oh, well, can we float down again? No, now you're stuck. So, and there's no cost to do a float down. There's no cost, to lock in, so I am a big fan. I don't play the game. And that's going to get down to one of our future topics when we call about bait and switch and comparing lenders, because a lot of lenders will tell you one thing and then it's another layer down the road.